Let's put the spotlight then on Reliance Industries, talk a little bit more about their quarterly performance and what the street makes of it. We've got Harshvardhan Dole. He's joining in, Vice President at IIFL Securities. And I think the key talking points were that you had the profit growth coming ahead of what the street was expecting, and that was largely driven by the O2C and the retail segments. How have you read into those two segments and the kind of quarterly sequential growth we've witnessed?
Hi, good morning. So one key highlight for the quarter has been the growth in EBITDA and reported profit has been more or less the same. If you were to analyze this trend for past several quarters earlier, the EBITDA was growing at a much faster pace than the PAT, largely because of rising interest cost and depreciation. This has been reversed from this quarter, largely because of the operating leverage, which has kicked in on the retail side and partly because of also Geo. I'd also think that stronger performance in ENP has also contributed to this kind of performance. So a great performance from all the segments. That's how we read the 2Q results which have gone by.
Harshvardhan, hi, morning. Thanks so much for taking the time out. I know we rushed you up from your morning meeting. But specifically about retail, because I was just looking at the SOTP valuations as well. Retail is now the most valued entity or highly valued entity amidst all the segments that Reliance operates in. Specifically, tell me about retail and whether that's coming at a surprise on the upside for you, and whether this is going to continue to be, the focus area from Reliance's stable and continue to perform better.
You're absolutely right. If you were to, look at the SOTP, retail contributes the highest as of now. Now, one should bear in mind the stake in retail is also higher as compared to Geo. So the attributable value by default will be higher than that of Geo. That's point one. Secondly, performance of retail has actually surprised the street and us as well. Perhaps what has happened is the share of matured stores in the overall pack have started to rise now. And that kind of leads to a natural operating leverage, which in my opinion should actually sustain and accelerate going forward, particularly in the festive seasons. So while we are surprised in terms of retail, I think the third quarter could be even stronger as compared to second quarter if you were to read the underlying currents which have been presented by the management in the earnings presentation.
What is the outlook then when it comes to overall Geo's performance? Because the 14% inline EBITDA growth could largely be attributed to the subscriber additions. What's the road ahead when it comes to Geo's performance?
So when we are looking at Geo, we are looking at close to about 18 to 19% EBITDA growth for the full year, which does not bake in any increase in ARPU. And we are assuming that only the subscriber growth kind of propels the EBITDA for the full year. However, when it comes to FY25 and 26, in addition to the subscriber growth, we are penning in close to 10% ARPU growth beyond FY24. And if that actually pans out higher than what we are assuming, that will not only lead to earnings growth, but also materially higher cash flows and improved return ratios in the later years.
Harshvardhan, given that the valuations are comfortable on Reliance right now, stock has underperformed for the last 34 odd months. I'm guessing you must have upped your price targets too?
So we have kind of held our price targets, and we think that the underperformance should end now, largely on account of the business momentum which has started to be visible. And secondly, the commentary from Reliance CFO has been quite encouraging. While he's maintained a very bullish tone on the underlying businesses, I think after a very long time, we got to hear that the capex for the company is likely to recede in the subsequent quarters. And were that the case, I think the cash flow generation should be much, much higher than the EBITDA growth, thereby leading to a much stronger balance sheet and hopefully a better return ratio profile in FY25-26. And these are the attributes that typically should re-rate a mega cap stock like RIL, which, as you rightly said, has underperformed for a very long period of time. So we are hoping that, the underperformance should start to reverse essentially from second half of FY24.
Very much for putting RIL's numbers into perspective for us.